Thank you so much, Louise. It's hard to do justice to this in 10 minutes. It's available online. There is a podcast, which George joined us for, and Louise and I also invited Nicola Shadbolt from New Zealand to add a New Zealand perspective in the podcast, so that's worth a listen. So please find the report online. As Louise says, there's an exec summary. It's 3 pages. There's a podcast that people can listen to when they're travelling, and there is a really simple set of actions and questions, reflective questions, both for farmers to ask themselves, and we couldn't resist a list for policymakers as well. I'd like to introduce my panel. We have with us today Martin Hanson, who's Head of Agriculture for HSBC, Rob Shepherd, who is a farmer and a conservationist at Allenford Farms, and George Collinson. George is a consultant at Collinson and Associates Limited. We've got some great questions coming in actually on the app. So I might go to a couple of app questions first while the hall are warming themselves up to thinking about what questions they would like to pose. With Manette sitting right in front of me, we've got a great question here, and I don't actually know the answer. Louise, how can we ensure this report is cross-checked with the Farm Profitability Review and its contents carried forward for future planning?
Okay, so as we'll be aware, there has been the Profitability Review, which for me has looked very much at the structure that is required to drive profitability. This report goes from the other end of the scale and looks very much at individual businesses and what individual businesses can do to make sure they have a future in which they can thrive. There are, as you will have seen by some of the recommendations, as would be the case, I'm sure Minette and I spoke to a number of people that were the same, there are recommendations that are similar, and I think it's important to recognise that that is the case. But this report is very focused on the individual business and what the individual business does.
Thank you. Louise and I do have the chance to talk to the Secretary of State about it, so I guess we could ask that question also of the Secretary of State. So, opening up to the panel, I think there is another very good question in here, which is, what is the first action you would recommend to a farm business to implement a balanced scorecard? Anybody want to go first? Otherwise, I'm going to throw it at Louise.
Shall I go first?
Yes.
Right, the first thing you've got to do is actually know your business and be honest with yourself. So the reason why return on capital employed is included in the report is that is something you should have on every set of accounts. How has your net worth changed? What is your level of investment in your business? And really get into those figures. Don't see what you want to see. Identify which areas of your business are working well and which aren't. And then you sit down with the balanced scorecard and you sit round as a group, whether that's a management group or as a family, and say, what do we want to achieve? Does what I want to achieve in this generation equal what you want to achieve in the next? And you cannot implement the balanced scorecard without thinking about those first. So you know your financial position and you're honest to all generations. And then you ask all generations, whether that's employees or yourself as the person running the business, what do I want to achieve?
Great answer. Do you want to add anything?
Could I
Yes, sure.
chime in on, I think it's opportunity cost is what you need to recognise. What are you actually doing with your farm, and actually what is your capital? What else could your capital be doing? If you look at the economics of the report at the start, £3.5 billion of cereals was produced in 2024, a bit more than £6 billion of horticultural goods. Same year, we imported £13.4 billion of fruit and veg. So what else could we be doing? If you look at, say, the Netherlands, which is, well, largest fresh produce producer in a similar climate to us, they don't produce very many cereals. They produce a phenomenal amount of fresh produce and export that around the world. So it is, what else could we be doing? It's also looking at land by 2055, we've got to have another 5,000 megalitres a day of water availability for potable and non-potable supply. That's not going to be achieved by the water companies. So what can farmers do on farm? Could you actually supply water? And again, the other point is a farm now just food, or is it also carbon and fibre if we're actually to decarbonise and move away from fossil fuels for industry? So it's those questions, I think, 2 and 4 that you asked in your 4 questions. What are we doing that we shouldn't be doing? And what could we do instead?
Yeah. I couldn't agree with you more. I mean, it's the time, we're on this cusp of this agricultural revolution, and I actually personally, what I liked about your report was it was so positive, and I'm very, very positive, and I think this is an exciting time to be in farming, frankly, but we have to sort of overcome a few bumps in the road before we get to the sunny uplands, but we have to look at our businesses thoroughly and decide what we're doing, and we can't get into an arm wrestle with people around the world that are producing commodity crops much more efficiently than us. So just put a mirror up to ourselves. There's a massive potential income stream in natural capital in the environment, which we haven't realised, and we've just got to open our eyes, take advice, and look at our own businesses through a mirror.
Martin.
What I would say is, first of all, this process is absolutely essential. When, as a provider of finance, somebody comes to us with a plan, the very first thing we consider is the skills and the experience of the people that have put the plan together. So this is a very wide-ranging balanced scorecard. There will be elements in it that you are completely on top of, and there'll be elements where you need to bring third parties in who have got greater experience and can help you build this out. And so I would say expand it out beyond the family, expand it out beyond the board of the business, and bring whoever you need to in to make sure that you nail this plan from the start, and then build everything else from there.
And the key part in one of the sections on the report is who's on your team, and having a critical reflection. Who's on the team right now at the farm? Who do we need to move to where we want to go to? They may be skills within the business, but also are likely to be skills outside the business. Where do you find those? Where do you get that capacity and capability?
Right, I think I want to get the lights up and the mics. I'm not seeing any paddles.
Blind.
Unless I'm, oh yeah, it's quite hard up here, blinded by the light. I can see a red book there, number 2. Can we have a question from number 2, please?
Yes, Clive Phillips. I was really interested in the discussion in the paper about the levels of debt and the relatively low leverage that we have in the agricultural sector, and the potential opportunity that was in order to develop and innovate and grow and perhaps move to greater profitability. Yet on the other hand, that was balanced against the low levels of profitability and the ability to service that debt. And I just wondered what the panel's comments were on how that might be unlocked, how you might break that logjam.
Did you want to go?
Yes, you go first,
Yeah,
Martin.
so I would agree that at an industry level, it's a lightly leveraged industry. But what I see across my whole book is a wide variation in terms of clients that have leveraged the assets they've got versus ones that are sitting on the assets and not particularly using them for anything other than maybe what they used to 10 or 20 years ago. If I overlay the risk pattern and the profitability of farms against how leveraged they are, then as you might imagine, as they start to leverage their assets more, they tend to become more robust, they tend to have diversified revenue streams, which help them. The point is to not take it too far, because when you see a farm in difficulty, it's often because they've over-leveraged the assets that they do have, or they've used those assets in a less than optimum way.
Does anybody want to add anything?
I just add that I borrowed a hell of a lot of money over my time, and basically it is the problem of paying it back in an environment, which I have done. I promise you I have. But you know, we're in the pig business, for instance. You're going up and down. So one minute you can pay your monthly payment, and the next you can't. And it's very, very difficult to actually manage these businesses on commodity prices and borrow money. And that's the reason that we're under-leveraged as an industry. And I was worried, particularly during the pandemic, at how willing the banks were to lend more money. And if we'd taken every penny that they'd offered us, we'd probably be bust now. So there's another side to this. So if we want to borrow money now, as you say quite rightly in your report, Louise, you've got to have an investable, proper investable plan to lend it in, and that probably isn't building a grain store. You know, it could be something for an alternative income stream.
George?
I think that is the point on alternative income streams. You also, in your report, you note the importance of the supply chain. So it's looking at those high value opportunities, be that intensive livestock, say poultry, which is a growing market globally for demand, or it is about looking at those high value fruit and vegetables, or it could be in greenhouses, and they're all very capital intensive. You're likely to need to borrow to do it. It's also actually with the IHT, you're better to borrow to do it than to own it all on your capital, on your balance sheet, because you'll pay IHT and you will be beyond the IHT threshold if you go into some of these high value opportunities with the amount of capital you're going to have employed. But the returns are significant. If you have a hectare of glasshouse, you might have £1 million of turnover. And yes, revenue is vanity, but it does allow you to service a tremendous amount of debt and have therefore higher profitability on your capital employed.
So I'd agree with you, it has to fit in the business plan. Turnover on its own, it has to fit into an investable business plan.
But in one of my other hats is chairing British Apples and Pears, and orchards are not an insignificant investment requirement. And what I'm seeing now from some of the large businesses is a reluctance to invest, despite having the supply chain lined up beside them, wanting them to expand. There's a hesitancy, and the hesitancy is being driven by what they're going to do in terms of the tax planning because of inheritance tax. Martin, I wanted to ask you, are you seeing that as a core part of the decision-making process yet?
What we're seeing are lots of conversations and lots of planning going on. What we haven't seen that often is it translating to changes in structures of the farm or a change in attitude or desire for finance. So it's the early stages, but we do expect to see it. And I know that many lawyers and indeed the bank has geared up its staff because we were expecting to see a lot of property perhaps changing ownership and repapering of existing debt, if not new debt. If I could just add one other point to the question that was raised. I think the banks have and do need to look at the way they structure debt to reflect the fact that we're in a changing environment. If I think about an arable move towards more sustainable production, you're going to see a dip in your net profitability for a period of years. It's going to have an impact on your cash flow, and the banks need to understand that, take a long-term view, and if it's commercially viable in the long term, structure it accordingly. And that's just one example of many ways that I think all of the banks need to look at the way they provide finance to free up as much capital as possible to allow this transition to take place.
So can I just come back in very quickly? So the gearing figures that are in the report and are often talked about did not include inheritance tax liability, did not include the challenges and it also doesn't include the real challenge for tenant farmers, or indeed the report differentiates between next gen that have capital behind them. It might belong to someone in their family, but they have capital behind them, and new gen. And one of the things we really need to think about is what are those new finance products we can bring out for tenant farmers who have going to have to borrow money based on the viability of their business plan, and also new gen that are coming in.
Rather than their asset base.
Can I?
You can, and then I'm going to go to number 3, number 4, and I've got somebody waving at me in the front row, and now I've got somebody waving at me over there.
So I just wanted to note the other thing as an industry, we need to be better with government and actually getting the changes to regulations that we need to make ourselves more profitable in the long run. The key one at the moment would be water, and actually having an abstraction licensing system that's fit for the 21st century, because that will enable most of those high-value farming opportunities to actually be resilient. And so just as an example, poultry, you can't build poultry buildings in a large part of Suffolk because you can't get water. The other point that's critical, and actually it's very good that Simon Pearson of LIAT is here in this room because he does a lot of work with the Barclays Eagle Lab, is on the agtech solutions that will enable us to boost productivity. We actually need to get our farm lenders to understand better about the opportunities those present, how they can lower costs and improve profitability, so that they're actually willing to provide the finance to enable people to invest in those solutions.
Yeah, good point. Can I have question number 3, please?
Jeff Sanson, Worcestershire farmer. Louise, thanks for the report. A great piece of work. I just loved your policy descriptors, the half-baked chocolate teapot, etc. But I would be very interested to know if, in the spirit of looking forward and being positive in your discussions, you were given any examples of brilliant policy interventions, or whether the panel could indeed think of any.
For me, whether it's market policy or government policy, it has to be linked to farmers having viable businesses. And one of the challenges when I describe policy as platitudes and et cetera, is that the policy is not linked to viable, growth-focused farming businesses. Some of the areas of policy I would say that are really good are where the market is actually extending their contracts with farmers because they recognise that decarbonisation, re-pivoting their businesses requires money. Lenders are not going to lend money unless you have a 10, 20-year contract. So we're starting to see some of that. What's also exciting is many of the and I would still call it policy, many of the finance instruments that are coming out for farmers to finance the livestock on their farms. So they're not embedding their own capital, they are looking at alternative models. Does it matter, like on a broiler farm, if you don't own the chickens? Most farmers, in their mind, are still farmers, even though the chickens don't belong to them. Now we need to extend that to a whole range of other sectors. You're still a farmer if the cattle on your farm don't belong to you. Yeah. And I think when we talk about policy, we need to recognise that the policy drivers may well not come from government. So I think those are some of the examples of good policy for me.
Can we go to question number 4, please?
Thank you. Ali, can I just thank the conference for commissioning the report. It's really important, these Oxford farming reports. I think they absolutely speak to what the conference is about, challenging us. It's really helpful, Louise. Thank you for all your hard work. And to that end, most of us spend far too much of our time downloading information and never reading the report. So my question is, could I have one of the hard copies that's on the table in front of you? Because it's really useful to go back to the information.
We are a charity. We are a charity, and we are dependent on our donations. We have a very, very small number of hard copies. My priority is my panel and our sponsor. But yes, maybe.
Could I say something? I think you raise a really important point, though, because all these reports, every report that comes out must be inclusive for all communities. That's why we've got a podcast. This is the first one that's had a podcast, so people engage primarily with that. The report that is on the website, you can just dip into an individual section. So you have which is probably 8 to 10 pages, so it's not a big read. We have the personal business development tool, which is 3 sides, where farmers can use that. It would be wonderful for me if there are many farming businesses that download those 3 pages or look at them on an iPad, and they start to ask those questions that are in there. So we have tried to also have both visual examples for people that are visual thinkers, the numbers for people that like numbers, and also the words for all those people who love lots of words.
I've got a question on the app, which I think actually might be in Rob's direction. It's about collaboration. Collaboration in UK agriculture hasn't always been successful. I would say that's a bit of an understatement. What are your recommendations for a successful collaborative approach? And I'm pointing that at you because of the work that you're doing with the Environmental Farmers Group.
Okay, thank you. So we started collaborating about 12 years ago with cluster groups. I don't know if you're familiar with them. Environmental cluster groups, there's now about 150 over the country. And it became clear that if farmers were going to get together and collaborate with their neighbours, you did need a lead farmer. So this is going to be the restriction of the collaboration, because it's got to be bottom up. It can't be dictated to you from the top. And there's a paucity of farmers and they're very hard-working, and they already sit on a load of different groups, and they don't always have time to do this job, which is unpaid. And when we did the job for about 12 years, we then set up the Environmental Farmers Group. We've now got 800,000 hectares in a cooperative that trades natural capital, and we're looking forward to the government changing their policy. If you want to know what a perfect policy is, then it's for them to mandate TNFD and ESG requirements so that the whole supply chain pays for the effect on the environment that farming does. At the moment, the polluter pays, whether you like that or not, but actually the whole supply chain should pay for what's happening to the environment because we're feeding them. It's the retailers that are making profits, and it's the people eating cheap food that are really benefiting from it. So that's what the government could do. But we just need these natural capital markets loosened up, and then we're going to have the most amazing opportunity for alternative income streams. But again, it's going to require an awful lot of leadership, and you know, we haven't got a lot of people in this industry. It needs proper leadership from people. We had that word out there, trust. Farmers want to trust the people that are leading them. They don't want to be told what to do. They don't trust government. You know, whether one likes the government or not, they do not trust it, but they do trust their neighbour. So that is the only way that we can collaborate properly, is with, and then we will embrace all the agencies. Peter and Alan, we will embrace you all, and you can talk to us as a big collaborative group, and then we will be able to get the good message that you've actually got into our members' ears, and that's how it works. It's going to be a two-way street.
Louise, do you have a comment?
I do. So the people I spoke with talked about top-down driving of collaboration. They talked about, you yourself talked about all the work that you're doing. But collaboration could simply be farmer to neighbour farmer. So my daughter's sheep, a lot of them at the moment aren't on our farm. They're on our neighbouring farmer's farm who is enjoying having our sheep on there. My daughter has spent most of her time putting out electric fencing, but we are collaborating for mutual benefit. Does that appear on our balance sheet? I'm not sure, but it is benefiting the viability and the investability of both our farms. So it could just be farmer to farmer, muck for straw, all of these kinds of collaborations. It's not the big things are important for scale, but it's the small things as well.
George?
So a couple of comments. On the perfect policy would probably be learned from the Dutch Greenport and Triple Helix model. Can't really point to one in Britain. The other point on collaboration is if you look at research and innovation, it's too much research and what the academic wants to do. Focused, it needs to be more commercially driven from collaborative farmers pushing what solutions they want.
We do have one model which has now disappeared in the UK that has driven immense collaboration in the horticulture industry, and that's the producer organisation principle. When I talk about collaboration, one of the key things I say to policymakers is collaboration costs money because it takes time. And that leadership, it doesn't come for free. You know, the idea that people should work for free to drive these really significant changes, we're not charities, we are businesses. So I would always say collaboration costs money. I've got a question number 4 over there. I can't see.
Thank you so much. My name is Khalid Mahmood. I'm from British Society of Soil Science. I had privilege to work with Manish, and we were together at Royal Agricultural College. My question here is, we've been moaning a lot about the policy here, but in terms of, agriculture is a commodity, and then we have to look at the global market as well. So what is the USP for the UK agriculture? What is the positive thing for us to sell? Is it soil health, something we sell, or natural capital? So just want to hear from you. Thank you.
Very good question. I think there are people who would say that we're a tiny island and we could take the approach of the Netherlands and focus on high-value crops on our small island. There are people that might say we could take a New Zealand approach and focus on our export markets, which may well include commodity, but of a very high standard. We are perceived very well overseas. So there are different answers to that question. Louise?
I would say, show me the money. That's what I would say. Jerry Maguire is quoted in this report. If you don't know who Jerry Maguire is, you have to see the film. Because all too often farming businesses are asked to give benefits for no financial return. And farming businesses need to look at, if you're asking me to do all this work on, is it going to add value to the bottom line of my business? Now, it may be that there is an internal value proposition for you to do soil testing, because actually you know what your soil indices are. That's probably a really good reason for doing it. But if somebody's asking me to do something in my business and I am overselling to a market who's not prepared to pay for it, I won't make a profit. And I think farming businesses have to think about that. Yes, could be right for my business, it could be viable for my business, but if the market's not there and I'm giving it away, and if I'm giving away all this unpaid family labour that sits around it, then I haven't got an viable business and investable product. So there's things we can do, but show me the money.
Rob?
I was just saying you've got a question over there.
Oh, thank you. I thought you wanted to answer the question. I've also got some great questions on the app. Let's take one last question here, and I'll try and get one more from the app.
Thank you very much. Thank you very much. Thanks, Sally. Jeremy Finnis, Essex farmer and currently master of the Worshipful Company of Farmers. And I'm afraid this is an unashamed plug. There might be young people in this audience who've listened to that fantastic presentation and report who are wondering what to do next with their businesses. Sign up for the Worshipful Company of Farmers Advanced Course in Business Management and it will answer all of your questions.
That is very naughty.
So I am a previous course director of that particular course. My question is, that's a brilliant course for the 20 people that do it every year, 22 people. We have got hundreds of thousands of people that we also have to develop. So how do we also develop scalable pathways as well as the executive pathways that you talk about?
I've got a final, very good question on the app. How can the report reach the farmers that have always done what's always been done with a view that they don't need to reflect and adapt and move forward?
I can do that. So on Monday night, I like to talk a lot. The academic in me comes out the more I sit on the stage. On Monday night, I was at a pizza and chips party with farmers. There's about 45 farmers in the room. I didn't present like I presented today, but I just talked to them about some of the key things in the report. Afterwards, they were all asking what the podcast was, how they could get the development tool. They might not read the whole report, but they wanted to ask those questions to their business. We have to get out there and be where the people are.
Google OFC26 report, and you will get a page that gives you the links to everything I've talked about, including the podcast. Before I ask you to show your appreciation for Louise and our panel, I would first of all like to thank again our session partners, Brown & Co and Tesco. I would like to draw attention for all of our delegates, please. Her Royal Highness Princess Anne will be joining us immediately after lunch. You will be asked to stand as our Honorary President joins us and takes a seat. Please can we ask that there may be no photographs of Her Royal Highness inside the venue during the conference. They're very strict. Lunch will be served opposite in the North School and downstairs in room 7, 8 and 9. There are menus on the app and they are also displayed on screens around the North School. There is a Worldwide Fund event in the East School Business Lounge, which is that way, starting at 1:20 p.m. and there's no food in there, so get your lunch first from over there or downstairs before you join the World Wildlife Fund event. And please be back here for a prompt 2:15 p.m. start. Can I ask you please to show your thanks to Louise?